Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have a live trading room. Weekly strategy roundtable, where we talk about Tradespoon subscription, current market conditions, and the purpose is to answer any questions you might have about Tradespoon subscription. For those of you who are new, this is my brief bio. Do me a favor, if this is your first live event, I always want to welcome new subscribers. Just say my first or say hi, something that says that this is your first live event. So this is my brief bio. I was Executive Vice President, Head of Technology at Options Express from its inception through 2007. Options Express was an online broker-dealer acquired by Charles Schwab in 2011. At some point, the company was worth over $2 billion. I'm very proud of that experience. Since I left Options Express, I work as a consultant and investor in several financial technology firms here in Chicago. I want to take this opportunity to say thank you to all the Tradespoon subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing that for over 15 years, mentoring and teaching Tradespoon subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in technology and science. Disclosures: trading stock and options involve risk and are not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own portfolio based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Rich, welcome. I'm glad to have you on board. And Elliot, good morning. Trading system. So before we talk about trading system, let's talk about current market conditions. That's probably just as important as signals. Let's look at bar chart. Let's do 6 months, probably will be better. So market is at all-time high, trying to break through the 300 level. We've seen this setup in the past, in July and September. The question, is this different in terms of the previous rallies we had in July and September? And will we revert back to 50-day moving average or perhaps 200-day moving average, or will we have a breakout from the all-time high? I personally think that there will be a breakout. The question is the time. Will it happen next week or will it happen, a month from now? That's very hard to decide short term. I'm still assume that the market will trade in a range. So if you're an aggressive trader and you trade in, and your time horizon is a couple weeks, I would say until the market breaks through the 304 level, makes new highs, I would assume it will trade between 303 and the 50-day moving average. I don't think we're going to break through the 50-day moving average unless there is some escalation in geopolitical events, whether it's a Brexit or US-China negotiations. But assuming that there is no negative escalation in those news, then I think you will see a lot of buyers stepping in at the 294, 296 level, right? So somewhere in here. And for now, there should be some positive catalyst for the market to break through 302 level. That could happen as early as next week. We have Brexit being voted in the parliament over the weekend. That could create momentum to the upside. If the phase 1 agreement is documented and agreed upon in next week or so, that could create positive momentum. We have interest rate decisions end of the month. So next 2 weeks, again, there are more news that can come out that can either propel the market to the upside and break through the upside, or revert back to the 50-day moving average. So I think for now, market is range bound. The only sector I saw briefly make a new breakout is semiconductors. Right, so semiconductors broke through the 52-week high and kind of now is taking a pause, right at that 122 level. So semiconductors are usually a good indicator of the future. was a clean breakout, kind of trading in consolidation phase, sitting right at that key support level, right? So two things will happen. It's a false breakout, and the semiconductor will revert to the 50-day moving average. That's one scenario. The other scenario that this is a consolidation phase and then the next leg up. So critical level, I encourage everybody to review your portfolio since market in the next 20 to 40 days has either they will continue to go higher, and you can structure your portfolio with the clearly defined stop levels. If it breaks through the 50-day moving average, I would exit some of these positions, just watch the 50-day moving average. Or you can structure your position that we're at all-time high and there's not a lot of room to move to the upside, and if there's no positive catalyst, then the market will revert back to the 50-day moving average. Both scenarios are plausible, right? It all depends on the news. Very hard to predict what the news are actually going to be, but it's very important to recognize that there is a probability for both events. You have to structure your portfolio accordingly. The other indicator that I think this is different from the previous rallies, attempts to make all-time high, is a dollar. Right, so US dollar making new lows, right? Continue kind of a precipitously selling off. One reason is British pound, strong British pound, and the hope that there will be orderly Brexit with the clearly defined agreement. So that's one of the impetus, but nonetheless, you can see this is a pretty bearish price pattern. We broke through the 50-day moving average. We broke through the very key support 98 level, and way oversold. So this is definitely a different picture from the rallies that we had in July, in April. The market rally on the weak dollar. So there's definitely evidence of sector rotation. Instead of defensive sectors leading the market, we have risk cyclical sectors such as financial sectors, semiconductors, technology, healthcare are leading the market, right? Utilities are down, XLP, consumer staples are down, and so I think this time, and especially that we are in year end, which is traditionally a very bullish period, I think this time this rally is different. So I think it's just not that it's not that whether the market is going to make all-time high. It's just a matter of timing, right? And timing usually will be just will require some kind of a catalyst that we just have to watch the news. Elliot, good morning. No audio. Okay, let's check the audio. Let me know if you guys can hear the audio. What's the Russell 3000 and VIX? Okay, so Bloomberg Pop. So let's look at the VIX. Also, VIX is sorry about that. Thank you for sharing. VIX is at 14, right? So VIX, there's not a lot of fear in the market right now. Could be a contrarian signal, right? We had this VIX low in July and in April, driven by some kind of news. So I think market is at all-time high, and probably it is appropriate to have a small hedge position. So in my personal account, if you're doing live trading, you can actually see that I have a November VIX spread position. So it does make to hedge. Will it revert back to 2024? I think the only way it can happen if, let's say Britain will not reach an agreement, or China and US will not reach that phase one agreement. Can it happen? Definitely can happen. What is the timing of that? Well, I guess we'll know in the next couple of weeks, right? In the next couple of weeks, we'll see where but right now, all the asset classes behave as if there is a sector rotation into the cyclical sectors. And and definitely I would be careful because we've seen last year was a little bit different setup. I think the sell-off happened because not only U.S.-China escalation of tariffs, but also very hawkish U.S. interest rate policy, which is not the case right now. So, but again, we would just have to keep an eye on the inflow of the news for the next couple of weeks. And I encourage you to open up an account at Yellow Tunnel. We actually posted a blog, Game Theory for Traders. And this is what the game theory basically talks about, that in a social situation, when you have different players, sometimes you have to be flexible, right? You cannot always be a bull, you cannot always be a bear. You have to look at the market condition, you have to look at the new influx of the news and where the asset classes are trading and make your decision. And if you're always a bull, or you're always a bear, or sometimes a duck, then that might, that is probably the most appropriate strategy. And if you look at our mental strategy webinars, we partner with Dr. Maneker, who is a trading psychologist. The research basically shows, and Dr. Maneker, not only a clinical psychologist, he's a professional trader, he coaches traders. He breaks it down into three important pillars of being a successful trader. First one is a belief and flexibility in the belief, right? You can be a bull, you can be a bear, you can have your own reasons, but market can quickly change direction, and you can see that the money will flow into different asset classes. And it's very important to have flexibility in your belief based on the data that you're collecting. And the second pillar of successful trading is to have a true discipline. And true discipline, it's something that takes a long period of time, where you have your trading journal and you document your trading decision, but also following your trading plan, documenting your decisions inside of the trading journal, and make sure you have a clearly defined stop levels. Because just because I think that the market will make all-time high, that doesn't mean that there is 100% certainty. It could be 60% certainty, 70% certainty, but it's not 100. And if there is a negative geopolitical events, Brexit, Turkey, Middle East, Iran, congressional inquiry into impeachment. So there's definitely different geopolitical events that can escalate quickly, and the market will turn around. So that flexibility in the belief and this true discipline is something that can make a difference between being successful trading and non-successful trading. So I encourage you, especially when you see market at key support and resistance levels, at all-time high or at 200-day moving average. This is very, very important to go to the Yellow Tunnel, review these videos on different concepts in trading psychology, and realize that we do trade, everybody, including myself, we do sometimes trade on impulses. Sometimes we do trade on our biases, and it's very hard for us to change our beliefs very quickly, right? So first step is to be self-aware and realize that these things happen inside our brain. Dr. Maneker talks about inner market, that sometimes we trade in the outside market, but more often than not, we trade in the market that's inside our head. It doesn't mean that that's the reality outside of our brain. So very important to recognize these concepts, realize them, and I think that will help you to be more disciplined and staying true to your trading plan. So as the homework for you guys, this is a free site. If you haven't registered, I encourage you to register. And just please review these blogs. I think they're free, right? This is a free site, and I think this is something that will help you become more self-aware and more disciplined, like ego. Is this important to keep in, what ego, is it important for a trader to have a strong ego? I come from a school where, when I used to trade at Options Express, built Options Express, our CEO would always say, leave your ego. He had a big sign on the door that says, leave your ego outside the door, right? So we all come from different school of thought. We all have different beliefs and biases. So it's important to recognize them. And that's the first step. All right, trading psychology aside and the market analysis aside, how do you trade in current conditions? Because that's probably half of the success is trading psychology and be able to look at the market. Angelique, hello. Tom, Sophie, Elliot, thank you. Frank, I think audio is fine. Audio is fine. Please call directly via phone line. Yeah, you guys can always, if there's some issues with the audio, not your audio, but with the audio in general, you can always use the phone line and dial directly. Lalit, hello, how are you? So the second half of the trading success is, what can you do? What is within our control, right? Obviously, we can't influence Brexit outcome. We cannot influence inquiry into impeachment, nor the reaction of the market to these news. But what can we control? So we can control process, right? We can't really concentrate on the outcome of these news because they're unpredictable, and we're either going to be on the right side of the trade or on the wrong side of the trade. But what can we control? We can control our trading plan, right? We can control how often we trade, how much cash we have in our account, what is our portfolio drawdown, and targeting, what is our target gain and stop losses. So trading journal, documenting what you see in the market, what was your decision, what was your stop loss, what was your target gain before you enter this trade is very important. You should document your trade and then enter the trade, and you should have a clear picture. You should be able to visualize the chart where you're either going to be right or you're going to be wrong. And if you're wrong, at what level you will exit the position, and if you're right, at what level you will exit the position. Those future forward rehearsals, which are very important for traders, trading, Dr. Maneker again talks about rehearsal, visualization rehearsal. Research shows that they're very important, whether you are running a marathon or you play in a basketball game or a chess. It's very important before you go to a match or you run a marathon to visualize what will happen in the future, and that will give you, it will prepare you better for, and you will make better decisions when the future arrives. All right, so those steps are very important. 30% in cash. In general, the rule across the board is that you should never buy in margin. You should always have the cash in your account to repair your strategies. If you do end up on the wrong side of the trade, there is different repair strategies we talked on our workshops. Always calculate portfolio drawdown. We're at all-time high. If the market continues to go high, what will your position look? What will your portfolio look like if the market rallies 5%? What will your portfolio look like if the market sells off 5%? Look at how many positions you have. On options position, usually I do a 50% stop loss, right? We do a lot of option trades. We do stock trades also. On long-term stock trades, usually it's 10% of your stock position. On the option position, if it's day trading, it's less than 1% stop loss. If it's not day trading, long-term trading, that's 50%. So let's assume that you're an option trader and you have 5 positions. You put 5% into each position. You have 25% allocation. Market sells off 5%. Your stop levels got triggered. You lost half of your position value. So your portfolio drawdown is 12.5%. If you have 10 positions, you put 5% into each. You're allocated 50%. Market sells off 5%. You're down 25%. So depending on the spectrum of how aggressive you are as a trader, it might or might not be appropriate based on your background, these drawdowns. But it's very important through your visual rehearsal exercises when the market reaches key support and resistance levels, to actually ask yourself and go through these exercises. And if you see that you have too much money invested into a market, it doesn't really matter if you're right or wrong, you're not following the trading plan, right? So it's very important to downsize your position, to be prepared that if you're on the right or on the wrong side of the market, that you are not overly extending your position. All right, so trading plan is important, right? Success. These are the steps to be successful trader. Trading plan is important. You need to learn what asset classes you're trading. Bitcoin, forex, equity options, binary options. Whatever you're trading, you need to understand underlying assets, how they are correlated to geopolitical events. You have to have an outlook on the market, right? You have to basically, you don't have to be exactly right, but you have to say, well, will the market make all-time high? Then you structure your portfolio one way. Will the market trade in a range? Then you structure your portfolio a little bit different, right? Or, will the market sell off 10%? So then you have to have that bias, right? You have to have that outlook, that belief that to rebalance your portfolio. So at Tradespoon, we have 3 different levels of memberships, right? Or I like to talk about 3 different buckets. It depends on how you are as a trader. So the first bucket is these live portfolios, right? Some people have full-time jobs. Some people just start trading and they just want to follow someone to trade. So we have first bucket is we have live portfolios. We have live portfolio if you're a stock trader. So robo-investor is for stock portfolio. You have positions where you usually hold them 3 months, right? This is in between earnings. Sometimes I would hold these positions. Sometimes, vest the earnings. Sometimes I would not. So this robo-investor is a portfolio of stock trades. We have anywhere from 10 to 20 positions. Every 2 weeks, we provide 2 trade ideas, right? And then via emails and SMS message, you get notification when to enter and when to exit the position real time. So that's the first live portfolio. The second live portfolio is for option traders. It's also for option and premium portfolios for option and stock traders, right? There is a choice for every position that we open. We give you a choice. You can trade a stock, you can trade option, or you can trade option spreads, and we show you what entry point, what are the exit points, and I do trade these positions via auto execute service at Trading Block. So you do get emails and SMS message, and in addition, if you have a full-time job, then you can also auto execute them through Trading Block. So that's premium portfolio, different from robo-investment portfolio. And the third one is the live trading room. In live trading room, I trade signals from 3 different services: active trader, monthly trader, and weekly trader. So these are signals that provide specific entry and exit points, and they're generated either on daily or weekly basis. And inside of the live trading room, if you participate in live trading room, then you can see these trades real time. Again, either you're in the live trading room, or if you're an elite subscriber, we actually provide you a trader's log. And this is a very unique tool. I'm very proud of creating this. This is a real-time synchronization with my brokerage account. So unlike other services where you get emails and SMS messages, you don't know where they're coming from. They're coming from Twitter, or they're coming from Excel spreadsheet. This is real-time communication. As I place the trade on the exchange, or the trade gets filled, like ITB got filled, you get email and SMS message right away as soon as the trade occurs, real time. So it's a pretty sophisticated system, synchronized with the real brokerage account, and you get a notification real time. So, and you can search, if you want to know what my, VIX, right? We talked about VIX position. So you can always go in and say, look it up and see how many, what was my VIX position, are there any open trades or closed trades, and see what position I have. So that's Elite Circle. So this is a live trade. So this is different portfolios where you can get email and SMS message every time I trade, depending on your membership level, right? The second set of tools that I recommend you to review are Active Trader, Monthly Trader, and Weekly Trader. Why do I like these services? One is that they provide you specific entry and exit points, right? So for today, let's say LEN, right? So we basically say you can buy LEN either at $61 or $61.05. So we give you specific entry, specific exit, bullish or bearish. And why is this important? Because in reality, models don't predict equally well all different asset classes and all different stocks. So we have specific process, specific algorithm that runs every day and basically says, each of the model, what are the best stocks that it's been predicting in the past? And Lennar, this is the home builder company, in the past, depending on the duration of the signal, in the past, the model did a good job predicting LAN. So we have this different levels of scrutiny, and you can actually see on daily basis which stocks to trade, right? And we give you 3 bullish, so you don't have to choose from a lot of stocks. That's the advantage. And the second layer is that we are able to achieve 75% accuracy across these trade ideas. So when I trade in a live trading room, my goal is to be 75% accurate. Doesn't mean that this will be a successful trading, not necessarily, right? You have to make sure the second step is after you decide what your probability of success, we were talking about 2 levers in trading. You can either push the probability of success lever, or you can push the return on capital. You cannot structure your trade where you're making 400% return and you have 99% certainty, right? Those setups don't exist. I wish they did, but they don't. So the higher the probability of success, the smaller the return on capital. So to be a successful trader, whatever that probability of success, let's say you want to follow Tradespoon record, you want to be right 3 out of 4 times, no problem. We can show you how to structure the trades where you're going to be 75% accurate, but then you have to make sure that those 3 trades that were successful, the total absolute value of the returns will be higher than the one unsuccessful trade. Because if the one unsuccessful trade, let's say 100% stop loss, and then the other 3 trades are only, let's say, 30% gain, then overall you actually lost 10% of your allocation, right, of your investment. So that's where it doesn't matter what signals you're using, and I don't really care are you a day trader, are you long-term trader, futures, options, forex, Bitcoin, marijuana stocks. It doesn't matter what you're trading and how you're trading. That concept, that simple, your trading becomes, just imagine 2 levers, right? You're pushing one lever, you're pushing the other lever, and it's as simple as, are your positive trades, do they outweigh your negative trades? Because we're all going to have positive trades, and everyone on this call will have negative, losing trades. You cannot have all trades positive, you can have a pretty good long streak of successful trades like you can see here, but then you're going to have streak where you have few trades that are unsuccessful, but over a long period of time you'll have winning and losing trades. So then it becomes very important to close your eyes, imagine these 2 levers, and just based on how aggressive trader you are, just make a decision for yourself. Are you going after high probability trades or low probability trades? It was actually interesting, this discussion on CNBC, the unusual options activity, right? So everybody thought, almost, when you listen to CNBC, you always hear about the unusual option activity. It's a great tool, it's a great concept, and it can work. But again, when you buy out of the money options, you know that the odds are against you, right? So you're not going to be 75% accurate if you buy out of the money options. You're probably going to be maybe 25% accurate, but it's the same idea. Those 25%, when you are successful, those winnings have to outweigh the 75% when you are not successful. And if they're not, then overall your portfolio will not grow. So that's kind of the essence of trading and how to become do we successful? Do we? So the only services that we do auto execute, the only two services that we auto execute are Premium Portfolio and Robo Investor Portfolio. In the live trading room, trades happen so quickly, to have them auto execute is just impossible. It's very hard to auto execute day trading, right? First of all, are you in the beginning of the queue or at the end of the queue? Some people will get filled, some people will not get filled. So auto executing day trading is, this is something we're not doing. And if some people do that, just keep in mind that the more subscribers you have and you're looking for small price fluctuations, then execution prices will matter. When you're doing long-term trades, then even if you have a lot of subscribers and you have liquid stock, then execution is not as important. And usually most of the people will get into those prices. So yeah, so it's Robo Investor and Premium Portfolio because these are not day trading portfolios. In live trading room, it's combination, right? It's a combination of long-term trades and short-term trades. All right, so let's talk about some of these specific trade services. Active Trader, right? So Active Trader is geared toward day traders. Active day traders, you either hold a position for a couple hours. If you have a large position, if you have a large portfolio, and you want to allocate and you want to hold this position overnight, like LEN, let's say, you like LEN, even though it's meant to be day trading, but you want to buy 100 shares, it's $6,000. If it's less than 5% of your portfolio, then you can hold it overnight, right? If this is 90% of your portfolio, then you probably don't want to hold it overnight because you don't know what's going to happen overnight. So that's short-term trading, either day trading or longer-term trading, and it will give you specific entry price. Buy at 61 or 61.05. Where do we find these prices? That's probably the most common question. They come from Stock Forecast Toolbox. So short-term trading, my favorite tool is Stock Forecast Toolbox. It's a very unique tool because unlike most of the tools, not only does it provide you the trend that spiders are in strong uptrend, it actually tells you what is the support and what is the resistance, right? It says 299.25 is the support, 301.86 is the resistance. These numbers came from last night, 6 o'clock Central. So then you can see where's the market right now. Well, the market is at 298.47. It's oversold, right? The market is oversold, and we basically tell you there's 82% chance that the market will close above 299.25. So if you want to go short, you're probably too late, right? The market is oversold. If you want to go long, you have 82% chance that market will recover and bounce off of this level. So if you want to go long, if you're a day trader, I would consider going long just by looking at this data and these probabilities, right? It's not 100% probability, but it's 82%, so which is a very strong probability, and we have model grade B. All right, so again, not every stocks is predicted equally well. We have a model that tells you how well this model predicts this specific sector and this specific ETF, and it gives you probability. Right, so at 298, if I look at spiders, and I looked at 1 month, you can actually see that 298 is a strong support for the market, right? It spans back to weeks, if not months. So model is actually doing a good job telling you that 298, it's a key support level. 20% of the time it will break through that and will continue to sell off. But 80% of the time it will bounce back and go higher. So if you're a day trader, you might want to switch to 5-minute candlesticks, right? Intraday, 5 days. Maybe wait for the market to find the support, and then you go long. So that's where we come. This is where the prices come from. And if you look at LEN, same picture. It shows you model grade B, positive trend, 83% of the time. If it reaches $61, this is where 61 came from, right? So 61 came from either you buy at what we predict the low, what the stock market, what the price predicted, what the model predicted, or you buy also at yesterday's close, strategy B. If you don't see the market down 0.5%, if the market opened flat today, then you have a choice. And if you look at LEN today, let's look at LEN. Let's see what actually happened, right? This was posted last night. Let's do 5 days. Intraday. Let's do 5 minutes. What's today, October 18? Okay. So you can see stock did, the low is 61.04, right? The low for today is about 61.04, right? So if you bought the stock at 61.01 at the open price, right? So when the market opened, it was let's say 61.11, 61.04. Then right now you would be up maybe 0.5%, close to 0.5% gain. So this is how you would trade LEN. Right? And then we give you a choice. You can either wait for 61.61. We're looking for 1% gain, right? So 1% gain. Or in live trading room, usually I do 0.5% gain. And again, there's no wrong or right. Always keep in mind that scenario of 2 levers, right? If the higher return you're looking for, the smaller probability, the winning rate will go down. So your winning rate will go down the higher the return on capital you're looking for, right? Just basic concepts of statistics, right? If you look at the bell-shaped distribution, right? That's how I always think about, if I look at the prices and I looked, at bell-shaped, if the stock is trading here, the more you want the stock to move, the lower the probability of success, right? The probability of winning is going to go lower, right? One standard deviation will be 75% of the time, 2 standard deviation will be 98% of the time. So that's how this is how you can set a reasonable expectation. So whether you're looking at the average true range to make that decision, or you look at I like to look at the stock forecast toolbox, right? We're predicting that between 61 and 62. So, you can expect maybe 1%. So then, okay, model predicts that $1.73, 2% move. From low to high, maybe you look for half of that. So you look for, 1%, 61 cents gain, maybe $1, right? But have reasonable expectation. If you think that today the stock is going to move, beyond $1.73, beyond the 2.5%, then that's probably an unrealistic expectation. So this range this is the range that the model is expecting the stock to move. And you cannot, if you set your expectation that the stock will move beyond that range, then that's probably unreasonable. Yeah, so LEN is active traded. This is only short term. This is today or tomorrow, right? If you want to see, do I want to hold this overnight? Then, or let's say the question was monthly, can I do monthly trade? I would go to research, right? And then I would use seasonal chart. Seasonal chart is optimized to make long-term decisions, right? So if I type in LEN inside of the seasonal chart, you will see 2 very main components, right? The question is, can I keep LEN longer term? LEN is actually 4 out of 4 predictions are lower. So that's pretty negative signal. So basically model says for the next 30, 40 days, actually LEN is way overbought, right? It made this huge move to the upside and the model doesn't see a lot more room to the upside. So it basically says, what, you're too late. If you want to hold this position for a month, you're probably too late. Wait for a pullback and then enter the position. So I don't, if I see 3 out of 4 or 4 out of 4 prediction lower, then I would not go bullish, because I see that 77% of the time the model is right. But for this is a long-term trade. For day trading, it's irrelevant what's going to happen in 40 days. For today, I'm trading LEM. So thank you for that question. So if you want to hold something long-term, like we had Akamai, right? Akamai was the short-term and long-term trade. If you look at Akamai, actually I didn't look at, I should have probably waited. Okay, so only 3 out of 4. So model is, let me look, find another one. Apple, right? I think Apple was. Actually, model is turning pretty bearish on most of these symbols, because it sees that market is overbought, so it shows. Is anything positive? Let's see. Also, so yeah, so model is pretty bearish actually. But anyway, but that's, yeah, if you want to hold something long term, you would do XLV, I think that's, so it's pretty bearish on IT, but it's pretty bullish on the healthcare. So okay, so healthcare, if you see 3 out of 4 higher, and you have like a long signal on UNH, right? You go in and you say UNH, right? Did an earnings announcement, rebounded, strong positive trend, right? It continues to go higher after the earnings, potentially can go to 250 to 60 in the next 10 days. So you look at the long-term healthcare sector, long signal is bullish, 3 out of 4 bullish, short-term bullish, so then you go long. And full disclosure, I'm long XLV and UNH, so something to keep in mind. So if you want to hold something long-term, I usually like to, if the 10-day forecast shows strong momentum and the 50-day forecast shows strong momentum, 3 out of 4 higher, you can look at these accuracies. Then, 8 out of 10 times, the average price between now and the end of the year, is going to be, higher. GT, reach, is that short-term, long-term? What's the holding time? You can never, people ask, what are your thoughts on, whatever, GT or spiders and Apple? And my first question is, what's the time? I'm bullish on all the stocks. I think they're all going to go higher, but so for some it might take 100 years. For some it might take 5 minutes. So timing is very important. But GT, 3 out of 4 predictions are higher, so that's a good signal. And long term, let's see, short term. Short term, strong signal down, right? So mixed bag. I don't know when they announce an earnings. When is the good year announcing earnings? Does this thing show earnings? So earnings are August, so September, October, November. So probably end of October, right? Somewhere. I assume it's going to be October 26th. So earnings is an issue, but it definitely looks like it's trying to break out of this range, right? So long term, model sees that this is a breakout and it will continue to go higher. Short term, obviously a good year has been in downtrend, and we have an earnings announcement, so it's kind of a mixed signal for now. UNH, it's easier. It's already announced earnings. Healthcare is in uptrend. Momentum, short-term momentum to the upside. Okay, so then it's easier to interpret. When you have earnings, obviously it depends. Last 2 earnings were a disappointment. Last 4 earnings were a disappointment, right? So if good year, with U.S. China, if they don't have a good earnings, then the market will sell off. So I hope it helps. Square. Let's see, Square. Short term is going into the earnings, strong momentum to the upside. Long term, 3 out of 4 higher, so good. So there's a lot of momentum behind Square, announcing earnings, I think, in a week or so. And again, model, I'm going to say something also something that maybe doesn't come intuitive to everyone. But model is great when you don't have news, right? Any models, it doesn't matter if it's Tradespoon, any statistical software. Whereas if you leave the news aside, if we live in a world where there are no news, then we can actually be very good in predicting where the market is going to go, right? But when you have news, that's where there is an unknown. So in UNH, there is no more news. I mean, there could be news, right? If there is an indication that Democrats will win 2020 elections, and they're going to start, imposing, not imposing, but start implementing universal healthcare, that will be bad for the healthcare sector, right? But, I don't know what the timing of this. I know UNH, Johnson & Johnson already announced earnings, so right now momentum is to the upside. But if I know that Square announcing earnings in the next 5 days, then it doesn't really matter. I can tell you what is the current trend going into the earnings, but after the earnings, it all depends what's going to happen, right? Last earnings in Square was a pretty big disappointment, right? We went from 84 to 56. So going into the earnings, long term, it looks bullish, right? Short term, it looks bullish, right? It looks like it's trying to, it build that strong support around 50, going back to December lows, right? And we briefly approached it in September, bouncing back, right? But it all is going to be dependent on the earnings. And we actually had a prelude of these earnings today, AXP, right? And that's why Square is probably down, because American Express, even though they beat the earnings, but market didn't really like it, and AXP is down 1%. And MasterCard is down. Okay. So, all right. So that's Square. All right. So that's active trade, right? So we talked about active trader. I explained where these prices come from, 61 and 61.05. Stop loss, it just does basic mathematical calculations. It says 1% stop loss, 1% target gain, right? And then you can adjust based on your own trading plan, whether you want to wait 1%. In live trading room, I'd keep stop level at 1%, target gain fluctuates anywhere from 0.5% to 1%. And you can do the same trade using options, right? If, let's say, you're managing smaller accounts, and 100 shares of LEN would be $6,000, which is maybe something that you're managing smaller portfolio, then 100 shares of 60 call that expires today, that's only $1, right? So you can buy 60 call for $1, right? That's 61, but you only spending $100, and your maximum loss is $100. So options gives you leverage, right? They give you leverage. They give you well-defined risk, right? The only negative part about options, you have to be right at the time, right? LEN has to move by today. By end of today, it has to move 0.5% or 1%. And if it doesn't, then it's actually moving 61.43. All right, LEN. Actually, full disclosure, I'm long on LEN. All right, so it's nice uplift, nice, exactly 0.5% up. All right, so that's active trader, right? So that's active trader. You can buy stock, you can buy options, day trading, or carry position overnight if you're managing larger portfolio. And what else? And common question, how did I find the dollar? Well, again, predicted low was 61, so 61, 60 call. You just take the stock price minus the strike. That's how I arrived at dollar. Another common question is, Vlad, what if it never reached $1? What if it traded at $1.10 or $1.20? Then it depends. Then it becomes your discretion. I personally, the only The only I have three triggers that I would enter the position. One is the predicted low, one is the previous session close, or yesterday's low. The other trigger that I always consider in live trading is yesterday's low, because yesterday's low is a very good indicator for day trading, who's in control. As long as the stock is above yesterday's low, bulls are still in control, but if the stock drops below yesterday's low, then bears are in control. So those are the scenarios that I usually trade. So that's active trader. Day trading again. We also have weekly trader, right? If you don't like to day trade, you don't really like to being under pressure. This is not based on your profile. This is not something you're comfortable, or you just don't have time for it. Then the next thing is weekly trader. Weekly advantage of weekly trader: you can have a full-time job. You can place your trade on Sunday, and wait till Thursday or Friday to execute your trade. I would still watch it, at least once a day. But this is something that can work if this is your full-time job, or if this is your if you have another full-time job. Same idea on we provide 3 bullish, 3 bearish trade ideas. Akamai was a trade idea, buying at let's zoom in. Let's see what happened with Akamai. Why don't I see? Not sure. All right, but let's look at Akamai. Five days. All right, so the signal happened on Sunday. Sunday was, so Monday you come in, which is the 14th. All right, so again, you have a choice. You buy at previous session, at the open price, or you wait for predicted low. Predicted low was 88.55, or 89.55 was the previous close. So you either buy at 88.5 or 89.5. If you bought it at 88.5, if you wanted to buy at 88.5, well, it never happened, right? So that the print never occurred. So then you would not be in position, right? That's another drawback, waiting for predicted low or buying at previous session close. If you wait for the predicted low, you will have a higher percentage of winning trades, but you will trade less often, right? And again, it just depends on what kind of trader you are. Do you look for risk, or you risk averse, right? If you look for risk, then you buy at yesterday's close. If you're risk averse, you wait for predicted low. Is there wrong or right? I think it's more of a question for your trading psychology. You will have less winning trades, but you will trade more often, right? And the outcome, in both scenarios you can have positive outcome, and in both scenarios one outcome can be better than the other. So it's just depends on your styles. But if you do buy it at 89.5, then the stock traded as high as 92. So that would be weekly trader. Again, you can either buy the stock or you can do credit spread. Usually on weekly trades I do debit spreads. So I just buy deep in the money, buy in the money call spread and hold on to it till Friday. And in this case, if I traded it, I would have been successful. But full disclosure, I do have Akamai position also. So that's weekly trader. It's a different model, right? So the model is different. It's optimized for 2 to 5 days time interval. And the mechanics are the same. You buy at the entry price. Since it's a longer time, we widen the stop losses. So stop losses and target gain are about 2.5%, right? So, and you can adjust, maybe 1.5%, if it's 1% or 2%, if it's 1% on a stock move, it's also great, right? If every week stocks move by 1%, then it's great. So then you just adjust these target gains and stop losses. Right now they're at 2.5%. And similar to active trader, if let's say 100 shares of Akamai is $8,600, right? And if that's not 5% of your portfolio, right, then instead of buying 8,600, instead of allocating $8,600, you can buy one contract for $2, and that's only $200. Again, advantage is that you are only risking $200. You know, if the stock actually moves to $91, you can make 100% return. You know, you can make 50% return in 1 week. So you definitely get a lot of leverage, limited losses. The downside is that, you know, you have to be right by October 18th, you know, in 1 week. If you buy a stock and let's say October 18, you're still down, well, maybe you wait another week, you know, because these models is actually 5 to 10 days. So that's pros and cons for stocks versus options. Question on NVIDIA. So again, semiconductors are leading the market. You know, full disclosure, I'm long KLAC and AMAT. You know, I follow the model. I don't have any exposure to NVIDIA. You know, this 1 year chart. So NVIDIA, you know, I think AMAT and KLAC are better stocks personally. You know, I like to buy strong. I'm long AMAT and KLAC, right? AMAT, you can definitely see, even today, it's outperforming NVIDIA. So it's a much stronger stock, more momentum. But if you are in NVIDIA, same thing. I would go in here, NVIDIA. You know, strong momentum to the upside for the next 10 days. And then I assume it's going to be, and long term, lower, right? But the model is turning bearish on all of the stocks. Not all, but all the technology stocks, right? I don't think I found one technology stock where it's actually not bullish. You know, even I think on Akamai. Yeah, it's bearish on Akamai and KLC. And one of the reasons, because it sees overhead resistance, sees that, listen, market is at all-time high, was it going to break it? Model doesn't know about the news, doesn't care about Brexit. It just looks at the current. Oh, so KLAC is a better stock, right? 3 out of 4 higher. So if I had to make a choice between AMAT, NVIDIA, and KLAC, I would stick with KLAC. It actually is, you know, it's a much better, stronger price pattern, right? All right. Yes. So the question was on the weeklies, doing debit spread, do I use 1 week or 2 weeks? Usually it's 1 week if I don't know the news, but like, let's say I know there's a Brexit, right? And I know Brexit is going to happen next week. I probably don't want to have position that expires on Friday. If anything, I would want to give myself at least 1 more week or even do monthlies if I know there is a big event. Like next week, I think there's a lot of volatility going to happen in the next 2 weeks, right? The market is going to either break out to all-time highs or it's going to revert to the 50-day moving average. So from that perspective, I know that we have, you know, potentially Brexit, and we have, you know, that phase 1 of the US-China agreement, and I'm aware of these news, and I know that they're going to create volatility. Then I'm going to say, well, I'm going to give myself more time, and then I'm going to maybe buy November contracts. But if I'm not, you know, if I'm not aware of the news, then, you know, same thing like with the earnings season. Right now, let's say there's a bullish signal on Square, but Square is announcing earnings next week. Well, then you either don't trade at the money options, or at least give yourself more time. So I hope that helped. Thank you for sharing. iSurgical is rock and rolling. Okay, that's good. Healthcare has continued to do well, outperforming the market. So iSurgical is up. UNH flat. Johnson & Johnson down. Okay. Johnson & Johnson sold off. Okay, so thank you for sharing. Semiconductors, investors.com. Ahead recovery. Okay. I think, someone is, sorry, you appear as trader. If you appear as trader, do me a huge favor. Go to profile, enter your first name, and then re-register for all the live events, whatever live events you're participating in. So at least I can see your first name. If not, you can always open up a support ticket and just ask, hey, please update my. But someone just shared about stock rallies they had. So I mean, if I ask everybody right now how many things we're going to break through the 52-week high, how many of you think we're going to go back to the 50-day moving average? No matter how often I do this, I always get, well, 50-50, maybe 60-40. It's never like everybody's going to say we're making all-time highs. You're always going to have bears, you're always going to have bulls. Going back to the game theory, which is a scientific experiment that has data, you don't always want to be bull and you don't always want to be a bear. At least that's my opinion. If you're always, always a bear, always, or you always, you should not be always a pessimist or always an optimist. Even though I think it's just how we are wired. Some of us are always bulls and some of us are always bears, which is okay, right? You can't change your DNA, but first step is to be aware of that. And the second step is to be flexible. And sometimes, sometimes you want to be an optimist, or sometimes you want to be a pessimist, right? Even though we're going to have a lot of people arguing with me about that, but it's good to be both sometimes. It's good to be based on the certain environment and conditions. The game theory advocates that sometimes you want to be flexible, right? That being flexibility based on the external data, that's what's important. Microsoft long-term research model says 3 out of 4 lower, so Microsoft is a little bit ahead of itself, right? So what is it? What does it model says? It basically tells you Microsoft is right now at, let's see. The question was, what's the long-term outlook on? It's trading in this consolidation phase, right? 141, 133. I like Microsoft. It's at 137 at 50-day moving average. Model is bullish. If you want to go bear, there's not a lot when the stock is at 141. There's not a lot of room to go to the upside. So the way I reason is that, well, the model is bearish. If I want to buy was the model bearish? Yes, the model is bearish, right? So the model is bearish, and it basically, and you can actually see it today. It's actually down, right? In the past 5 days, model is correct. It's way overbought. It's actually selling off, right? So buying at 133 is a much better price. If you want to go long Microsoft at 141, you're too late, right? If you want to go in, wait for the breakout. If the breakout occurs, wait 1 or 2 days for confirmation, like with semiconductors, and then you go long Microsoft. But at 141, when the market is overbought, you just wait for that breakout. There's no reason to be overly optimistic and hope that there will be an orderly Brexit or hope on phase 1, right? You don't want to trade on hope. You actually want to see these breakouts occur. And once the breakout occurs, then you can follow. And until then, well, it's actually trading right at the 50-day moving average, right? Is the market selling off, by the way? Looks like a lot of stocks are down. Not really. So 298 is still holding on. QQQ. So spiders are okay. So QQQs are down. QQs are down 0.5%. Okay. So yeah. So that's my view on these Microsoft. What do I think about iron condor strategies? Yes, I think right now it makes sense to continue doing iron condor strategies, right? So you can sell, market is overbought, so you sell a call spread, right? You can sell a call spread. I would not sell put spread because I think you're not going to get enough premium, but if you see market pull back to 50-day moving average, then you do a put spread, because until there is a confirmation in a breakout, right? We do see dollar selling off. I do see defense sectors are pulling back, but there is no evidence, even semiconductors, right? It looked like they had a clean breakout, right? But you can see they're definitely in consolidation phase right now, right? So you want to wait for this, some kind of a confirmation, that the semiconductors are continuing to go higher, and then you go long. So until you get that confirmation, you assume, the best scenario right now is to assume that the market will trade in the range, right? That the spiders will trade in the range between, between 302 and between 302 and 294. And when you see a breakout, then you can change your opinion. All right, guys, thank you very much. It's 11:40. Hopefully I answered all of your questions. Don't forget about your homework. Read up. I encourage you to watch at least one video from these, recorded webinars and read the blog. I think it will, it's a good, hopefully it will stir some thinking and some more, make you more self-aware and make you more a better trader, because I do strongly believe that trading psychology and being self-aware is going to make you a more successful trader. If you're not self-aware, if you don't, this emotional intelligence, if you don't understand emotional intelligence, or just don't practice, not self-aware, I think you are leaving some profits off the table. So hopefully you guys will find this useful. All right, guys, thank you very much. Have a great weekend. Enjoy your time with your family and friends, and I hope to see everybody next week. Thank you.